Good morning, Richard Calhoun, Creekside Realty. 40 years of working with clients here in Silicon Valley. We're here today to talk about the real estate market, not only what's happened in the last week in both San Mateo and Santa Clara counties, but also what happened in Santa Clara County single-family homes in the month of April. Starting right off with the weekly data, this is what I call macro data. It's 1 week worth of data. It's for Santa Clara County, San Mateo County, single-family homes, condos and townhouses, and I'm comparing it to the 5-year median. The 5 years I'm using are 2015 through 2019, and that's represented by the yellow line. So if the individual data point was performing according to the 5-year median, it'd be right on the yellow line. The left-hand side of the purple line is the data sets for 2021. The right side is the same week number in 2020. What is this telling us? I think the first thing that I want to point out is inventory. Inventory is essentially this dark blue line right here, and it's a tad bit below the median, but not significant at all. I would say we have absolutely the exact number of listings that you'd expect to have in both counties, all three types of properties. The thing that we're having is we're having a huge demand surplus, and you can see that in this sort of burnt red line up here. We're selling about 122% of the number of listings that you would expect to sell. So if you're selling 22% more homes with the same amount of volume, people perceive the lack of inventory. The real issue compared to the last 5 years is we have surplus demand. The gray line that I sort of skipped over is the number of new listings in the past week, and since it's only 1 week of data, it jumps around a little bit more, but you can see last week it was right at 100%. This week it's about 120%. So this week it's going to make up for that surplus demand. There is definitely a shortage in single family homes, more so in Santa Clara County than in San Mateo County, but this is the whole macro data blended together, which I normally don't do, but this concept is just to see where the real estate market is going. And since we have normal inventory, we don't have a surplus of inventory, and I think everyone would agree with that, and we have surplus demand, the real estate market remains in a hot market, hot sellers market conditions. This is looking at days of unsold inventory. Days of unsold inventory is the key index. If there was one number I could look at in any given area, I'd want to look at what the days of unsold inventory is and what's that compared to that normal marketplace. So for the both counties, all three types of properties, I define a normal marketplace to be between 40 and 80. I will point out we are rarely in that normal marketplace, but normal is defined as where the buyer and the seller have roughly the same amount of negotiation leverage when they're trying to negotiate a transaction. In the red area down here below 40, you're in a red hot seller's marketplace. Up here in the blue area would be an ice cold buyer's marketplace. So where are we? The yellow line again is the 5-year median. The blue line is the data. We're below, which in this case is a hotter marketplace. So then where we've been for the last 5 years is somewhere around 27 days. Where we are right now is right at 20 days. So you can see it's quite a bit lower. Someone might say that, 7 days isn't that much quicker. I will point out the closer you get to about 7 or 8 days, the harder it is to get below that. It's not going to get down to zero because listing agents and sellers aren't going to accept an offer the first day the house is on the market for the large part. And that artificially boosts days of unsold inventory, even if it would be a lower number normally. Each line on here represents a week of overbidding. And again, this is still the macro data. So both counties, all three types of properties. As it goes along this red line, the market's heating up. The current line is this purple line here that I made bold so you can see it a little bit better. This is the best month we've ever had, which was April of 2018. And when I say month, it is actually month macro data, but it is for the month of April of 2018, which would be April 1st through May 5th. Down here, December would be December 1st of 2001 through January 4th of 2002. So I went back and got the macro data where up until the last week or two, I don't remember when I actually changed over, I was using single family homes in only Santa Clara County. I've now changed over to macro. So everything on this is macro. So we are comparing apples and apples. The big takeaway is is the dotted lines are the oldest lines. And by the oldest, you're going back to around the first of the year, January 1st, December 28th, or whatever it is. That's actually off my screen. And the more middle range ones are the dashed lines. So those are the, mid-March, mid-February type frames. And the most recent 8 weeks are the solid weeks. And so basically the trend has been up as an improving marketplace. You can see we bounced around a little bit. Sort of this gray line is the best month we had. It's cooled off a little bit the last 2 weeks, but not significantly. So basically April 24th was the absolute best we had as overbidding. Now, that doesn't mean the market's really slowing down or anything of that nature yet, but I believe what it basically says is you got far enough into the year, sellers and agents realized the prices were up and they increased their asking prices. And so the amount of overbidding wasn't as much. I've done a few changes on this slide that I think are enhancements. I've added in the entire county for Santa Clara County. So now you have more stability. So on April 10th, you can see that you had 14% appreciation. Then a week later, it was 15.7%, stayed the same for a week at 15.7. Now it's up to 16.8 last week. And this week it's up to 17.5. So you can see we're appreciating close to 1% a week. If you average it out, it might be closer to 3/4 because you had this 1 week where it was zero. But here you went up 1.5%. Here you went up zero. So that's 3/4. Here you went up 1.1, and here you went up 0.7. So right around 1.75%, 3/4 to 1% would be the average over that period of time. The other thing I did is I added in the median transaction date for the different micro market areas. So you can see that the first area to reach the micro market area was East San Jose, Central San Jose, San Jose, where the last one to reach it was the moderate low, which are Blossom Valley, Milpitas, Santa Teresa, and North Valley. So they're all close together. There's only a 2-week spread between all of them. And basically that's where the day of year where 50% of the transactions happened before and 50% happened after. Then you had the median price for the entire calendar year of 2020, and that's the appreciation using that. I don't do that for San Mateo County because historically there's pockets of San Mateo County that I haven't gotten, the miscellaneous pockets like La Honda and things of that nature. And I didn't want to just do a weighted average, which would be close. So I just didn't do it. But you can sort of see the trend up here. In South County, it's clearly on fire. It's at 30%, where the next closest area is 19.5%. The lowest area is at 13.5%. So they're all fairly well clustered together. South County is probably the one that stands out as being the biggest exception. And that summarizes it for the week. What I'm going to do is do a little bit of details on the weekly data before I get into the monthly. Historically, I had been jumping to the month and coming back, but I think I got it down, so I'm not going to run out of time. So I'm going to just finish up on the weekly. What you're looking here is the active listings this week, which is the bottom row, and the previous week up here. So you can see that inventory for single family homes has stayed the same roughly, and condos has actually decreased a little bit. And even in the single family homes, it has gone up for Santa Clara County and has gone down in San Mateo County. Now, if you go down to the number of offers, this is not this week versus last week. This is 1 week data on the top row, and this is 5-week data on the second row. And the reason I use 5 weeks, even though this is macro data, is 5 weeks is what I like to use because it gets rid of a lot of the weekly fluctuation and it's easier to tell trends. And again, there's no huge takeaway that I picked up here. There's changes, but it remains strong. You sold 600 homes in the last week. You sold 3,000 over the last 5, so it's roughly the same ratio. But for us to be selling 3,000 homes, that is a lot for us to be selling. That's 600 a week. That is high volume, which is that extra 20% that I was talking about. Then you come down to, again, what I think is the key indicator, which is days of unsold inventory, which is just simply the ratio between the active listings and the number of offers that were accepted. And you can see the fastest area remains Santa Clara County at 17.3. This has gone up now this is the second week in a row it's gone up. And I think it was 17, might be the third week. I think it was 17, 17.1, 17.2, and now 17.3. So not huge increases, and 17 is very, very low. It's hard to get below that level. So the fact that it's going up is not a concern at all at this point. It's not getting any hotter. It's basically at a plateau. This is what it's showing it over time. And here you can see the plateau that I'm talking about. This is single family in Santa Clara County. Yeah, there's a few squiggles in that line, but when you're taking data every single day, there's more of a weekly cycle. So probably if I did every Friday instead of every single day, that line would get a lot smoother. The next hottest area is the condos and townhouses in Santa Clara County, followed by the single family homes in San Mateo County. I will say that historically, although it's not anywhere on this graph, San Mateo County is typically a little bit lower days of unsold inventory than Santa Clara County. Clearly, there's been a shift, but the shift happened before the pandemic hit us, because this is basically January of 2020, and you can see San Mateo County was already slower than Santa Clara. The hot one was condos, potentially because of affordability. They're the ones that have changed the most because they went from the hottest type of property to the slowest type of property, and only recently have they come back now and improved. And I think what's happening now is people are finally saying, hey, I can't afford a single family home. I'll take a condo and townhouse instead. This is the days of unsold inventory geographically, and I have changed my numbers down here quite a bit. Now I don't hit saturated red until I get down to 10 days of unsold inventory. And sure enough, Cupertino and Sunnyvale got down to 9.5 days. So it's a saturated red. The no color range is now 42.5 to 77.5 days, and saturated blue to 110. So you can see there is now color gradients in here, but the redder the color, the hotter the marketplace. So you can see right up here along the San Mateo County is the weakest area. You can sort of see the middle part of Santa Clara County is not far behind, but it's definitely much redder. Actually, South County is probably paler than the central part of Silicon Valley, but so probably one up here, 2, 3, but obviously all the numbers are over here, and you could figure out, other than Cupertino, the next fastest one is Milpitas, North Valley, Berryessa, and Santa Teresa, and Blossom Valley. This is looking at the number of active listings without an offer, and that's a mouthful, but I'm pretty clear on that definition because my definition is fairly unique. Most people will put included active listings, those listings that the listing agent is seeking a backup offer for, and I just do not think that that is realistically of what the marketplace plays out. This is the number of new listings. You can see that the number of new listings is above the 5-year median. This is the number of new offers. This is what the issue is. This huge gap between the yellow and the blue line. This is all surplus demand. That's why prices are going up so rapidly. That is why the market is so fast. And this is the number of closings, not much different than the number of new offers, other than it's spread out a little bit. But these are the surplus number of transactions. You can see we lost a little bit here right after the pandemic came in effect, but we made that up by now through here as well as the beginning part of this year. Now we're changing over to closed transactions. We're looking at overbidding. Overbidding sort of is a measure of how much pressure the buyers are sensing on their offers. And you can see we're up here at somewhere around 76, 77% of the sellers are getting more than their asking price. And again, this is just 1 week data. It's both counties, all 3 types of properties. You can see it's down from the peak of 80%. But, if someone said 80% of the sellers were getting more than they were asking, or now 76%, is there any difference in that? I don't think so. I think it's fluctuation. That's one of the things I've said on this slide quite regularly. There's just a lot of fluctuation from week to week. Yeah, it's a little bit lower. I think, again, it's because sellers have raised their prices. This is looking at the frequency of overbidding. You can see the hottest marketplace is single family homes in Santa Clara County, followed now by San Mateo County single family homes. And that's noteworthy because the condo market is a hotter marketplace based on days of unsold inventory, but based on the frequency of overbidding, San Mateo County single family homes are getting overbid more often, which would sort of support the theory a little bit that condos and townhouses are people's second choice. Now we're looking at the frequency of overbidding geographically. You can see again along the San Mateo Santa Clara County border is one of the coolest areas. You can see the different areas right along Mountain View, Sunnyvale, Cupertino is one of the hotter areas. The overbidding magnitude, this is how much are buyers willing to overpay. And you can see about 2 weeks ago we were at 109%. 109%. We're now down at 108%. Again, a little bit of a downward number jump. But, if you were looking at this, basically it came up to 108 and it's been flat, with this 1 week being a blip in the upward direction versus a trend in the downward direction. This is the overbidding geographically. Again, you can see that I've adjusted the colors here so that we have a little bit more color variation on the map. I thought there's no reason to have a map that's solid red, so I played with my scale. And again, this is a very similar data that we saw earlier. So I'll jump to here. We haven't seen this. This is just the last 12 weeks instead of 20 weeks. So here's the dotted lines, and the dashed lines don't show up for some reason on this particular graph. And then you can see the 4 most recent weeks are all grouped fairly closely together. This now is monthly data for May, and this is going to be single family homes in Santa Clara County. And this was noteworthy because the current line is now very, very close to the 2018. So the 2018 is this orange line here, and your red is still a little bit below. It's crossed over in a few locations, but overall I would say it's below. But the fact that we're almost at the best month we've ever had is pretty incredible. And then if you go back and look at what a year's made, here's 2020 right here. And this is where we were starting to see the impacts of the pandemic. So you were definitely in the lower group a year ago, and now you're basically tied for first place. That's pretty significant recovery. And, I don't think anyone would have expected that. I will point out this is correct up here. This is May 1st data. I just simply ran out of time today. And this is one of the graphs that's the least interesting. I doubt there's any significant changes in this graph, which is another reason I didn't bother changing it. The numbers will have changed, but the relative colors between the different areas will have not. And that wraps up the week data. So I'll pause and see if anyone has questions before I jump into the monthly data. Moving forward on the monthly data, we're looking at April data, and my April data is not a calendar month of April. My April data is April 1st for the next 35 days. So it's up through and including data on May 5th. And I do that because there's a huge weekly cycle. By doing calendar month, the number of recording days change. There's a lot of fluctuation. This makes it easier to compare from year to year to year without having to making adjustments, which are always questionable. So you start off with the median asking price is $1,650. That's $1,650,000. And again, this is now Santa Clara County, single family homes only. That really isn't significant, but sometimes when you compare this to the list price of what's selling, you can see that the list price of what's selling is lower. That doesn't mean sellers are taking a discount. We just went over that. The sellers are getting a premium. What this means is that the lower priced homes are selling a little more rapidly than the higher priced range homes. They're making up a bigger percentage of what has sold in the last 35 days. This is important up here, this 14 and 15. This is the speed of what is on the marketplace that successfully sold. The average is only 14 days. The median is 8 days. So that means once you're on the market for more than about 8 days, you need to start thinking about why your house hasn't sold. Compared to what's on the marketplace is at 42 and 10. The 42 is what's sort of telling. Of what's selling, the average is 14. Of what's on the market, the average is 42. So that basically starts telling you have two different types of properties. You have the properties that come on the marketplace and sell, and the properties that come on the marketplace and sit. Here's your days of unsold inventory, and you're at 17.1. Here you can see last year you were significantly higher. You come back in time, and there is no time that we had a lower DUI than we have right now. Even if you go back to the hottest years, which were 2018, you were at 24.7. And I do maintain there, even though it's only 7 days, it's 1 week, there is a fairly significant difference between 24.7 and 17.1. So the speed of the marketplace is faster than we've ever experienced. This data only goes back to 2002. I have accurate data going back to September of 98, and I can tell you at no time during that time frame was it at 17. And being in the industry since 81, there hasn't been any time that we've been here. So since 1981, the 17.1 days is the fastest marketplace we've ever experienced in single family homes in Santa Clara County. Now we move down to this data. I'm not going back and calculating because it was a lot of work to redo and it really wasn't meaningful. unusual. It was overkill. So I'm eliminating, and there's a few other data points I'm eliminating. And if anyone feels that there's value in that data, send me an email, give me a call, let me know what that value is, and I will reinvent it and put it in for the data that's missing. So now what you're saying is you're selling 40.2 homes per day. We have outperformed that, and you only have to go back to 2012 to be at 44 days, and you go back to 2009 and you're at 55 days. So we have sold a whole lot more properties, and you go back to the early 2000s and you were selling more properties. But the number of transactions has been decreasing gradually over time, and 40.2 is greater than it's been any time in the last almost decade. 2012 was not, 10 years ago, and that is the only year that breaks it in the last decade, and it doesn't break it by much. So we're having the second most number of transactions. The speed is what's happening the most. Going down to the square footage, going down to closings. The reason I'm dropping the days on market here, it doesn't matter what the days on the market were when it's closed, because it lags, and basically it's going to be the same data as up here, just lagging by 30 days. So you don't gain anything. And I was trying to cut down the number of charts because, I've already highlighted the important lines. Now what I'm thinking of doing is getting rid of the unimportant lines. So you have important lines highlighted, medium importance, no highlighting, and just less data so it's not so overwhelming. The overbidding is here at 109.8%. Now that appears to be higher numbers than what was earlier in the presentation. Earlier in the presentation was weekly data for both counties, all three types of properties. This is single family homes in Santa Clara County only, which is the hottest marketplace. But notice now, when you look at the frequency and magnitude of overbidding compared to 2018 was higher. So even though we're in a faster marketplace now, and you would expect overbidding to be higher because of that, it's actually lower. And I believe the reason for it being lower is a year ago we had a major insult to the marketplace, and it's my hypothesis that every time you have a major insult to the marketplace, buyers are more conservative on how much and how frequency they're willing to overbid, more on how much they're willing to overbid than the frequency. And that's exactly what this shows. 82% versus 84.5. That's almost the same, but now you're at 100, just under 112%, 110% versus 112.5%. That extra 2.5% is significant in my opinion. And then you have the 10 percentile, which is now over $1 million. The median price, which is what most people follow only, is at 1.6, and the top 10 percentile is at 3.2 million. Then you have the number of closings, and to be fair, we have to come down, and maybe I need to highlight it. We need to come down to this 35 line. And the reason for that is I changed the definitions. For a while there, I was using calendar months way back here. Then I was using 30 days, always 4 weeks plus 5 weekends. And now I'm using 35 to be consistent with the offers accepted. So you come down here to the 35 and you're at 1374. You can see the numbers here are the same, and they're the same for the last 3 weeks, because here's where I changed the definition. But now from here back, they're not. So comparing the 1374 going back in time, it's still a record until you get way back here to 2005. And for those that aren't in the industry or weren't in California in 2005 was essentially our last real heyday. It ended fairly abruptly for the lower end of the market in February of 2007. The higher end of the market got impacted in August of 2008. So back here when the market was on fire, you have 1672, 1905. Those are clearly higher years. You have a 1720 back here in 2000. I believe, and I have to check the data, I wouldn't be surprised if years like 97, 98, 9, and 2000 and 2001 were also higher than the 1374 that we have now. Yes, ma'am.
Oh, okay. This is Lily. I just wanted to. Okay, can you go to the last one? Yeah, here. When I look at it, the sold price 10% and the median and 90%. Is that where I can find how many homes actually sold in these three groups? I can, because I think a 90% probably you're talking about in the 5 weeks will be like 20 homes, right?
No, not at all.
That's what I was wondering,
I'll explain. Let me explain, because I think maybe other people aren't understanding. The median is the midpoint. So with the median at 1.6, half the homes sell above, half the homes sell below.
Okay.
The 10 percentile is you have that same order of the list, and
Right.
you come in 10% of the homes. So if the number of homes that you're looking at is 1,374, 10% of that is 137 homes.
Oh, okay. I see. So I know for your
137
number.
homes sold for 1,011,000 or less.
Right.
Likewise, 137 homes sold for $3.2 million or more.
Okay.
So the number's 10%.
Yeah.
And then,
Oh, okay. So yeah, so still would be like for the top 90%, the number of homes is still be 10%.
yep, because
Okay.
that's how you pick the price. The price is picked by coming in 10%. A lot of statisticians look at quartiles, so they would be looking at the 25 percentile and the 75 percentile. And yes, that is statistically more significant, but my goal in doing this was not to tell a consumer that 50% of the homes are between these two prices, but to say 80% of the homes. So right now, what you can do is you can come up to this 10 percentile number and down to this 90 percentile number, and 80% of the homes in Santa Clara County, single family, are selling between these two numbers. So I
Mm-hmm.
artificially pushed out the numbers as far as I could. If you went out to
Mm-hmm.
95 percentile and 5 percentile, there would be too much bounce. And that's how I settled on 10 and 90.
Okay, so that means 80% of the home of the 1374, actually the median price is 1.6. Yeah, 80%. All right, good. Thank you. Yeah, I got it.
Your explanation was incorrect, I think, but you would get the same answer. The median price is simply the midpoint. So half the homes are higher, half the homes are lower.
Okay, yeah, that's true. It should be 100% of homes.
It's right. It's
Yeah,
it's 100%, not 80%.
right. Okay,
Not a
okay,
problem.
yeah.
Now what we're doing is we're looking at a 12-month moving average. And I've never been really 100% comfortable with this graph, but it is starting to look more correct with more time and more familiarity with it. So the purple line here is days of unsold inventory. So you can see that market's crashing. So what it's basically saying is we're getting an increasingly fast marketplace. And again, remember, this is monthly data, so we're looking back in time, and that is what's happening. You go back here to about May of last year, and ever since May of last year, the market got hotter and hotter and hotter and hotter. You can see the pandemic slow down, so that all makes sense. The days of unsold inventory is just the current number. And so even though I claim this is monthly data, it's the data taken on the 5th of May representing monthly data for May. Now, all the other ones, as you can see up here, are a 12-month average. So what do we have going on here? We have inventory. So inventory is the blue line. So if you come back here and say that the inventory is about 1,000 homes, and you come out here and you say the inventory is only about 750, maybe 800. Richard, you said earlier at the thing that we had exactly normal inventory. I did. That's normal inventory for both counties, all three types of properties. Now we're looking at inventory in just single family homes in Santa Clara County. Now, if someone said there's a shortage of inventory, I would absolutely agree with them. So the details matter. We only have about 80% of the single family homes that we would expect to have. Then if you look at the red line, that's the number of offers. You can see that that's been climbing, and you can see that now we're above where it's been, and you got to come all the way back here to like 2013 before the 12-month moving average was higher than one we're having right now. And that's exactly what we saw on the table before. And then lastly, and I'm not looking, the gold line just is closings, and you can see there's times when the closings are very close to the red line. That just means you have a very low TFT ratio. Then you have larger TFTs, and right now it's sort of a moderate, almost a typical close of escrow. So that's another way, is how much separation is there between the two lines. And then the green line is the price. And you can see that when you start looking at it and you're looking at a 12-month moving average, you end up with a fairly smooth curve. You can see you had a peak right here, you had a little valley here, and then we've been climbing pretty much ever since. This is just the same data for the last 10 years instead of the last 20 years. Here is again the last 10 years now, and I will get these slides consistent. This is just the last 10 years. Here again is DUI, that's improving. The fuchsia line down here is the median median. The gold line is the average. If the market was in a very long-term stability market, the median, the average, and the DUI would all be roughly the same. We'll never see a marketplace like that because there's just too much variation. Here is going back 20 years in time. This is looking at the sale price to list price ratio, the overbidding, and this down here is the frequency of overbidding. And you can see we're basically approaching the all-time high, and this is for the last 10 years and also the all-time high for the last 20 years. Let's talk about the 20 years. Here you go. So now we're going back 20 years. So here we're approaching it. Here's your all-time high, which was just shy of 85%. And now we're basically about 82.5%. And again, this is single family homes, which is why the number's higher than when we were talking about the macro data. And here is the magnitude of overbidding. You're at 100 and basically call it 110%. I think it was 109.8% if I remember the number correctly. The red line above the red line is a hot seller's marketplace. Between the red and the blue is a balanced marketplace. Same down here above the red is a hot seller's marketplace. Between is balanced, and below the blue is a cool marketplace. So you can see we spend very little time in a balanced marketplace. We're either in a seller's marketplace or in a buyer's marketplace or transitioning, and we tend to transition pretty rapidly. In fact, what I would say is we were in a seller's marketplace up here, we transitioned into a buyer's market, went back up, then we were sort of in a normal marketplace and now back up to sellers. So you had two transitions here close together versus spending time in the marketplace. So it's all how you look at the data. Then I don't know why this didn't get updated. It's March data. We saw April's data because April's data is very similar to the last 5 weeks since we're now at May 8th. And this is just your 10 percentile median price and 90 percentile. This is on semi-log paper. So the rate of that slope is your rate of appreciation long-term. This is what people are more used to seeing in standard graphical format. So you can see prices dip down at the year, and you can see that happens every year. This isn't really property fluctuation, value fluctuation. It's the homes that sell over the holidays tend to be smaller homes because people that have larger homes tend to have multiple generations or families living in their home, and they tend to take the holidays off from real estate. And so the home square footage, the type of properties that are selling change versus values actually changing. This is going back the last 20 years. And that's actually a good question. Would people prefer that I spend time talking about the 20-year cycle here, going back to January 2000, and I should cut that off to January 2020 or January 2002? Or would you rather me talk about the last 10 years so the scale's out? And people can let me know or voice up. And then this just shows you the ratio between the 10%, the 90 percentile and the median, and the 10 percentile and the median. And the ratio between the median and the median is always equal to 1, which is what the black line is. So you can see that right here, you had some vertical separation, which means you had price expansion. Through this area, you sort of had a narrowing and you had price compression. Not that that's really significant. And that summarizes it. And just since I didn't do it at the beginning, to get to the meetings, you could use this root. The root URL is the green, and I keep that the same for all my different URLs. You add 2021 to get to the live presentation. To get to the handout, which I did get posted about 5 minutes before I went live, you add the word handout and the 8-digit year, month, day code. So that would be 2021 05 08. To get to the archives, it's just the root URL that will take you to my YouTube channel. You can pick any month you want, or if you put in the year, month, date code, you get to this specific episode or whatever episode you want to go to. And then this is who I am and how to reach me. And then I've been in the business for 40 years. With that, I am done opening up for questions. Not seeing anyone unmuting themselves. I'll call it a day. Thanks for joining me, and feel free to reach out to me, and have a nice week. Take care, everybody.
Thank you.
You're
Thank
welcome.
you, Richard. Have a good week.
Yep. Take care, everybody.
Bye-bye.